Hey investors, welcome back to the channel. If you've been following the precious metals sector, you know 2025 has been absolutely incredible for gold stocks. But one company has been absolutely crushing it, Royal Gold Inc., trading under the ticker RGLD on NASDAQ. Just recently, Royal Gold touched a new all-time high of $235.56, delivering a jaw-dropping 74.67% return over the past year. That's not a typo, 74%. And in just the last 6 months alone, the stock has surged 28%. But here's what's really interesting: while many investors are chasing the next hot stock, Royal Gold has quietly built an 18.6 billion market cap empire with an 87.7% gross profit margin and what Investing Pro calls a great financial health rating. Today, we're diving deep into what's driving this incredible performance, whether the stock can continue its momentum, and most importantly, is it still a buy at these levels? Let's get into it. Business model graphics showing mine operations and gold bars before we talk numbers. Let's understand what makes Royal Gold different from traditional mining companies. Royal Gold doesn't actually dig for gold. Instead, they use what's called a royalty and streaming business model. Think of it like being a landlord in the mining world. Here's how it works. Royal Gold provides upfront capital to mining companies. In return, they get the right to purchase a percentage of the metals produced at a significantly reduced price, or they receive royalty payments based on production. 3 reasons. First, they avoid the massive operational costs and risks of actually running mines. No equipment breakdowns, no labor disputes, no environmental cleanup costs. Second, their profit margins are incredibly high. We're talking 87.7% gross margins. Traditional miners typically operate at 30-40 margins. Third, they have exposure to multiple mines across different jurisdictions. As of their latest acquisitions, Royal Gold now has 80 revenue-producing assets globally. That's serious diversification. And about 75% of their revenue comes from gold, with the remaining from silver, copper, and other metals. 2025 performance. Now let's talk about their recent performance, because these numbers are impressive. In Q3 2025, Royal Gold reported record revenue of $252 million, that's up 30% year over year. Their adjusted earnings per share came in at $2.06, compared to just $1.47 in the same quarter last year. What drove this surge? Several factors. Show bullet points first. The average gold price during the quarter was significantly higher. Gold has been on an absolute tear, recently touching over $4,300 per ounce. Second, they saw increased production from key assets like Peñasquito in Mexico and Rainy River in Canada. Third, they benefited from their diversified portfolio, with both stream revenues up 24.8% and royalty revenues jumping 41.5%. Their stream segment alone generated $166 million in revenue, while royalties contributed $86 million. Here's what's really exciting. Despite this record quarter, management sees even more growth ahead, especially with their recent acquisitions, which we'll discuss next. Major acquisitions. In October 2025, Royal Gold completed 2 game-changing acquisitions that completely transformed their growth trajectory. First, they acquired Sandstorm Gold Ltd in an all-stock deal worth approximately $3.5 billion. Shareholders received 0.0625 Royal Gold shares for each Sandstorm share, representing a 21% premium. Second, they acquired Horizon Copper Corp for about $196 million in cash at $2.0 Canadian per share. An 85% premium. These transactions added 40 producing assets to Royal Gold's portfolio in one shot. These assets are expected to contribute between 65,000 to 80,000 gold equivalent ounces in 2025 alone, increasing Royal Gold's production by approximately 26%. The combined company now has the most diversified portfolio in the streaming and royalty sector, with no single asset accounting for more than 13% of their net asset value. That's exceptional risk management. The revenue mix is now approximately 87% from precious metals, with gold contributing about 75% of total revenue. To fund these deals, Royal Gold drew $450 million from their $1.4 billion revolving credit facility. Currently, they have $1.225 billion drawn, with $175 million still available. Management believes they can repay the outstanding borrowings within 2 years at current metal prices. And here's the cherry on top. In November 2025, Royal Gold announced their 25th consecutive annual dividend increase, raising it 6% from 1.8 to 1.9 per share for 2026. That is a quarter century of consistent dividend growth. The company is actually the only precious metals company in the S&P High Yield Dividend Aristocrats Index. Gold market outlook now. You might be wondering, can this rally continue? Let's look at what's happening in the broader gold market. 2025 has been historic for gold. The metal has surged approximately 60-70 this year, with some analysts calling it the best year since 1979. Display Analyst forecasts major investment banks are extremely bullish on gold for 2026. JP Morgan predicts gold could reach $5,000 per ounce by Q for 2026, with potential for $6,000 longer term. Bank of America sees gold hitting $5,000 in 2026. Morgan Stanley has revised their 2026 forecast upward to $4,400 per ounce, implying another 10% gain from current levels. The World Gold Council's analysis suggests gold could rise 5-15 in 2026 in a moderate economic slowdown scenario, or 15-30 in a deeper downturn. What's driving this bullish outlook? First, central bank purchases remain elevated. Despite higher gold prices, central banks globally are continuing to diversify away from US dollar reserves, with purchases expected around 750,900 tons annually. Second, geopolitical tensions and trade uncertainties are pushing investors towards safe haven assets. Third, expectations of further Federal Reserve rate cuts in 2026 would make gold more attractive compared to interest-bearing assets. Fourth, investment demand through ETFs and physical holdings continues to grow, with ETF inflows expected around 250 tons in 2026. For Royal Gold, higher gold prices directly translate to higher revenues and profits due to their streaming and royalty agreements. Analyst ratings. So what are Wall Street analysts saying about Royal Gold specifically? The stock currently has strong support from analysts. Show ratings. Jefferies recently raised their price target to $270 from $261, maintaining a buy rating. TD Cowen maintains a buy rating with a price target of $263. Raymond James upgraded their target to $264, also with an outperform rating. Some analysts have even set price targets as high as $280. Several recent analyses have upgraded Royal Gold to buy, citing robust financials, solid project advancements, and improving gold market fundamentals. Show current valuation. At the current price around 2-to-1-235, Royal Gold trades at forward P/E of 19.61, price to sales of 16.97, market cap of $18.66 billion. Investing Pro analysis suggests the stock is slightly undervalued at current levels, even after its massive run-up. Risks and conclusion. Now, let's talk about the risks, because every investment has them. First, Royal Gold's revenue is heavily dependent on commodity prices, particularly gold. If gold prices decline significantly, revenues will suffer. The World Gold Council notes that a stronger than expected US dollar or higher interest rates could create headwinds. Second, increased leverage from recent acquisitions. With $1.225 billion drawn on their credit facility, there's less financial flexibility if things don't go as planned. Third, operational risks at partner mines. Royal Gold doesn't control operations, so any production issues, delays, or underperformance at key mines directly impacts their revenue. Fourth, the stock's momentum has been extreme. The monthly RSI is at levels not seen since 1980, suggesting the stock may be technically overbought in the near term. That said, the bull case remains compelling. Record financial performance with 87.7% gross margins. Diversified portfolio of 80 producing assets, 25 consecutive years of dividend increases, strong gold market fundamentals for 2026, leading position in the streaming and royalty sector, expected production growth of 26% from recent acquisitions. So is Royal Gold stock still a buy at these levels for long-term investors who believe in gold as a strategic asset and want exposure to the precious metals sector with lower operational risk? Royal Gold remains an attractive option. The company has proven its business model works through multiple commodity cycles. However, given the extreme run-up, I'd suggest, if you're not already in, consider waiting for a pullback. The stock's momentum indicators are stretched, and a 10-15 correction would be healthy and provide a better entry point. If you already own it, hold and enjoy the dividend growth. The fundamental support continued strength, though you might consider trimming positions if they've become oversized in your portfolio. For aggressive investors, the gold bull market likely has room to run based on the analyst forecasts we discussed, but manage your position sizing carefully. Remember, this is not financial advice. Always do your own research and consult with a financial professional. What do you think about Royal Gold? Are you buying, selling, or holding? Let me know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more stock market content. Drop any questions in the comments and I'll do my best to answer them. Thanks for watching, and I'll see you in the next video. Keep investing smart.